Welcome everyone to BoomerWorks. I'm Shira Lotzar, happy to be your host today and grateful to be joined by my volunteer colleague, Michael Butera. And we are welcoming Hans Hoffmeyer. Thank you, Hans, for joining us today. I've known Hans, we just figured out, for almost 10 years. He's been my accountant and so good to have him in my corner. And today we're going to be doing Accounting 101 because this is a topic that comes up periodically for small business owners and certainly those who are just entering the self-employment world. Lots of detail to talk through, and Hans is going to try to simplify things for us. So we are looking forward to a robust conversation. And just a little bit about Hans. He is a small business accountant, and he helps folks with their accounting needs, tax needs, financial advisement needs, just a very well-rounded professional, and he's happy to be here to serve today. And so there'll be opportunity for discussion, but you don't have to wait until the end this time because there's so much detail that he's going to be covering that you are welcome to either post things in the chat. You can even just raise your hand and sort of, stop him along the way if you don't understand anything, because there's obviously a lot of complexity to this. So we are happy to engage you as you need. So with that, I will toss this over to you, Hans. Take it away.
So just to give you a little background on myself, basically I'm an enrolled agent. A lot of people don't know what that is, but very quickly we get our license directly by the Treasury Department. So for example, CPA is licensed by the state. We're licensed directly by the Treasury. So we actually have a little bit more ability to help people. And in fact, a lot of CPAs use us to help them in certain situations. I'm also an investment advisor representative. So I use the Avan Tax as my broker dealer. So we kind of marry the two between tax advice and financial advising together. Have a couple of master's degrees, but the most important is finance and accounting. And I got that right here, UMUC from Maryland, of course. So that's my background. I've been doing this for many years, across 3 decades at this point. So I guess I'm kind of doing this for my life at this point. So in this session, we're going to talk about how to set up your business, issues facing new companies, best practices for taxes and accounting, and how to avoid, major issues, key pitfalls. So just like with Shira's going to help me, if you have any questions as we go, some of the stuff, I'll try to be as short-winded as possible, but it can get, as deep as we want to. Type of organizations, when you start off as an organization, you're just considered a disregarded entity, so a little confusion. That's actually like a sole proprietor, basically. You can only be one sole proprietor in terms of the IRS. So if you ever try to get a second EIN, for example, as a sole proprietor, it's not possible, and you have to do something different like an LLC. So a lot of people start off as a sole prop. Some people do partnerships. Sometimes I see married couples doing partnerships, which is really not necessary because they're kind of considered one in the terms of the IRS. But some people do partnerships, especially if they're trying to get people into, maybe buying a restaurant together, that sort of thing. The S corporation, that is basically only a federally recognized organization. The states don't recognize it. And just to give some clarity, LLCs, which we'll get into, that's a state level thing. The federal government does not recognize LLCs. So the reason people do S corporations, there's several reasons. The biggest reason is, once they make over a certain threshold, usually around $130,000, $140,000 net profit, it kind of makes sense to start splitting out your income between what comes through the S corp and what you're payrolling yourself. For example, say you made $130,000 and you just list that on your Schedule C as a sole proprietor, you're going to be charged employment tax on everything, which is roughly 7.65 times 2. When you do the S corp, you can say, well, my pay is actually say 90,000, and the other 40 or 50,000 comes as an ordinary dividend per se from the company through your K1, and thus you're eliminating that tax. and that saves you about $3,000 or $4,000, right there. The downside with doing the S-corps is it's a little bit more expensive. The IRS usually likes to see payroll at that point. You're doing the S-corps return, which is an 1120S. And so, accountants are going to charge for that extra work. You might be looking at another $1,000 or so in expenses if you're going the S-corps route. The other thing to note on the S-corps is once you're an S-corps, you're less likely to be audited by the IRS as a business to the tune of about an 80% reduction. And part of the reason is it's more of a professional setting. Part of the reason is when you're doing the Schedule C, which is where everyone else kind of starts off with, that's just where a lot of gameplay happens between, a lot of things, people doing childcare, bootleg cabs, just all these things you're kind of thrown into that bucket. So they just give that more scrutiny. The C-corps, just to talk about that briefly, is not something a lot of people do out of the gate unless they know they're doing it for an exact reason. Some people do a C-corps because they're going to go to IPO in a few years, initial public offering, and that's the whole premise of it. Some people do it because of medical reimbursement, for example. If you want to have a medical reimbursement plan, C-corps is a lot easier to do that with. And kind of talking to the nonprofit a little bit, a lot of people start nonprofits. You're basically doing a 990 form. There's a short form and a long form. Short form obviously is easier, but if you want to attract funding from, say, people who work for the Department of Defense, they're not going to see you unless you do the long form. And you have to do the 990s, correctly. There's a lot of scrutiny there for a lot of reasons, most notably because the government wants to know the money is going to the right people and not to some terrorist organization, for example. So those are just kind of like, some of the key pieces that people try to jump into. Now the LLC, just to speak to that for a minute, an LLC can be absolutely anything. An LLC can be a sole proprietor, it can be a partnership, an S-corps, a C-corps, it can be absolutely anything. So what happens is when you have your articles of incorporation from the state and your EIN from the IRS, and you say, well, we're going to graduate to, say, an S-corps, there's a form you fill out with the IRS for approval, and then that LLC just fits from like a sole proprietor to an S-corps. I see we have some chat questions. Let me go through those real quick. Oh, yeah. So some of these are for sure about sharing the video. Got that.
Yeah. So Ramona asked, how easy is it to switch from a sole proprietor to an S-corp? And then she has a second question after that.
Okay. Yeah. So to do the transition, there's a form you fill out called a 2553, and you simply fax it. The instructions are on the form. And that's it. And then the IRS will give you a letter in about 2-3 months, and they'll say you're approved. And an important note is you can sometimes ask to go backwards on a variance with the S-corps approval because it's due for, if you want to be an S-corps for 2023, you needed to do that form and send it in by March 15th of this year. So then you're like, well, I have to wait till next year. But they usually always give a variance going back at least 1 year. You really need an accountant to do that for you because there's like a certain thing you have to do on there. You have to actually write something on there to a certain revenue code. It's not that straightforward, but you can usually get it going back a year. So what I do with a lot of clients is I'll wait till January and February and we'll say, hey, where were you for 2022? And if it makes sense, I'll ask for an S-corps to go back a year instead of just doing it on its normal course. You see payment and account for sole private. Yeah, absolutely. So kind of talking about accounting with your business, what happens is most people ask for a W-9, okay? And a W-9 form is basically you just putting your name, address, your social security number, like if you got a job as a contractor and they're going to give you a 1099, you're going to do that as a business, but instead of putting your personal information, you're going to say, here's my business name, here's my EIN, and they're going to issue you possibly a 1099 at that point if they, do more than $600 worth of business with you. Now, if you, a little bit knowledge here, if you check the S Corp box or the C Corp box on that thing, they don't have to give you a 1099. Same thing for you. You don't have to give someone else a 1099. You can just put that in your file. But if they don't check that box, that they're a corporation of some type, then you're supposed to give them a 1099 by January 31st. So yeah, going back to your question, if you have a business account for, it gets into kind of commingling. Let's put it this way. You can have an account and put everything in there. It doesn't matter what the accounts really go to in essence. But ideally, you want to have accounts titled to your exact company or companies, and then, have everything kind of segregated out. What happens with accounting is people get busy and the year happens, and then you're like, you can't remember what happened back in February or March. So when you're working with accountants, typically they're trying to look at everything at least at the month end, so they can kind of understand the pieces while it's fresh in everyone's mind. But ultimately, you can do anything you want as long as you can track, where the money's going and coming from.
So Hans, I just wanted to kind of chime in here a couple things, because this is that's the one slide that not that I'm an accountant, I do not play one on TV, but I have a little speech that I give because I do some small business coaching, and this is my little speech, and you've heard me say this, but I do want you to please correct me if I am off in any way. When most people start their businesses, they're either thinking about sole proprietor, LLC, or S Corp, and you've certainly gone into some detail around the tax side of things. There's a legal implication as well, right? So with sole proprietor, you don't have any legal protection. Right. LLC, you have some, and S Corp, you have more, okay? So depending upon the kind of service or product that you're providing and your risk factor, right, you may want to consider, does that really matter to you in terms of your protection? On top of which, as an S Corp, you are considered the employee of your company. So if something happens, if you get sued, right, it's the company that's getting sued, not you personally necessarily. Again, not a tax lawyer either, or a regular lawyer, but there is a protection level there. And then again, there's the financial side too. And something that I'm not sure, Hans, I don't think you brought it up quite yet. From a tax perspective, right? When you are a sole proprietor or an LLC, all of your money is considered in one lump sum. So you're taxed at whatever rate that is for that entire amount. But when you go to the S Corp, you are taxed on, you can take with, Hans, I think they call it a reasonable salary, correct? Is that the phrase that's used? Yep. Reasonable salary. So let's pretend, okay, let's say you've made 150 by the end of the year. You don't have to claim 150 in one lump sum. You can claim a reasonable salary. Let's pretend you say 50K, okay? You say 50K is my reasonable salary, and that goes on your personal income statement. You're taxed at whatever rate that is. And then the remaining 100 is put on a case statement, and that's also taxed, but it's two separate rates instead of being one big rate where, because our tax rate goes up and up by percentage depending on how much you make. It's two, if you will, lower rates potentially, right? So you can be saving some money on the taxes on the back end. Hans, did I explain that correctly?
So that's absolutely right. I think I did talk to it, but I'm saying a bunch of things. But yeah, no, that's absolutely perfect. And to the LLC, every state created their own version. And so Maryland is not as friendly with companies as, say, Delaware. So some people love to be in Delaware as their company, and they operate as a foreign company here. So.
And there also depend, you and I were talking earlier before this got started, that you also may want to be thinking about, if you're, let's say, going in an LLC, what state you do go into. Because, like, what did you say, Maryland, Virginia's like a $300 or no, $50 fee for LLC, and Maryland's like $300, something like that. Like different states have different costs. Absolutely.
State has a different thing. Obviously, like Ohio, there's no cost to maintain your LLC. Virginia, it's $50 every 2 years. Maryland, it's $300 every year as a franchise with the personal property tax return, and you're putting in the property in your business that you use, like your desk and your computer, and then they give you a bill after that. So you'll do this Form 1 in March, and then say September, Montgomery County will send you a little bill for $10. You're like, what's this? What's related to that Form 1? And like we were talking briefly before this, Pennsylvania, they kind of have different taxes depending what county you're in. They could be EIT tax, mercantile tax, LSC tax. So yeah, everything's low. In DC, because I know we have DC people on here, there's a franchise tax, which is a minimum of $250, but that works kind of yin and yang with your personal tax return. So that adds a little wrinkle to it. And the thing about DC is, a little side note, is you can do your tax return as a new company and you think you've got everything, but there's then you get a letter from DC saying, well, you don't have a business account yet. And you have to do this FR 500 form to set up the account. And it's easier if you work with someone who has some experience with it, simply because DC is not very friendly in terms of actually getting you through like step A, B, and C. They're just like, go to the website. So anyway, there's all these things by state, like you mentioned.
I have another question, Hans, and thank you for this. It's very needed. So for someone like me who's just starting out and not expecting to make $150,000 this year, is it better to just start out as a sole prop and then when I anticipate making 150, switch over to an S corp?
Yeah, absolutely. There's nothing wrong with that. What kind of work do you do?
I'm doing coaching and speaking.
Okay. So kind of like what Shira was talking about, like maybe you don't need an LLC to do that work because maybe you don't think there's liability. I knew someone who bought an aircraft and they were going to rent it to the school. So obviously they wanted to do an LLC for that. So, you know, the question about the LLC part would be more of a liability if you think there is that issue.
Yeah, so I have an LLC right now, but it's called it has ministries at the end of it. And
Okay.
what I'm trying to do is get into the government space. And so that's not going to help me. So with coaching, consulting, and speaking, I just wanted to do something different that because it's not going to be religious content, right? I have my separate business where it's specifically religious, but for this, it's not. And so I want someone to be able to write a check or deposit to an account that doesn't have ministries at the end of it. And so you said LLCs are not recognized by the federal government. So I don't think that would be the best way to go. So it sounds like it's either sole prop or S corp.
Yeah, no, by that I mean they just don't give it any special treatment, is what I meant by not recognizing it. So just to clarify, number one, you could be a DBA of any organization. So even if you have your LLC, you can say I'm DBA, you know, Rock Hudson, and still operate that way. And logistically, you can always amend your LLC with the state or create another one if you had to. And just a little side note, I don't know if this is absolutely true, but I'm pretty sure it's true. If you have a business account, it doesn't matter who they write the check out to, they're going to cash it and deposit it in that business account typically. So there's just a thing with business accounts, like you can actually write it to Dave's trash company and deposit it in your bank account, probably. And most companies, you know, like when you're working with the, you know, like we have here at 8A government, I have people that work with the government under, you know, minority contracting and such. They, you know, they're just looking for information. You're just giving them like a routing and account number. They really don't know where the money's going actually.
When somebody's sorry, Hans, when someone's it's considered a 1099, right? That's typically sole proprietor, correct?
Yeah, exactly. So if someone gives you a 1099, that's when I get excited and I'm like, hey, let's talk about becoming a company if you're not, because everything, you know, so many things are deductible. Whereas as a personal person, when you get a W-2, there used to be unreimbursed employee expenses, the 2106 form on the Schedule A. And that mostly went away in 2018. Some states still look at it, but not the states around here. So, but the other thing we were talking about a little bit, like legal resources. just a little caveat to that, like sometimes people ask me, you know, a lot of these legal things you can do yourself. The next step, like, you know, a lot of people use Legal Zoom. There's also like Zen Business, I think. And then of course, the most expensive is using a lawyer. A lot of times lawyers have maybe a package if they're doing LLCs a lot. And I usually recommend going to the Bar Association for your state, like for DC or Maryland. They usually have a referral system. So, and I think like, yeah, going back to the 8A government contracting example, the reason I kind of put that in there is I do have those customers, and there's a lot of connection that you're doing with your accountant when you're doing that type of work, because they want the, you know, the P&L, the balance sheet, the cash flow statement just to be so, and then, you know, for it to be proper, like as it connects from year to year. So that's only like an, you know, an example. If you guys have any questions about 8A, you know, obviously we do that, but that was the only reason I put that on there. So going to the next slide.
Hey, Hans, before you move on, can you repeat that AA?
Yeah, so like if you're a minority person and your company is owned by a minority person, you can get preferential treatment, my understanding, in earning certain government contracts. Yeah. And that's called AA. And so there's other pieces to it, which are kind of beyond the scope of today, because you know, you have to get certain things in a row with different government websites. But the biggest part that I do help people with that process, actually I have it sketched out, but the biggest part that I usually help people with is making sure their accounting is properly set, because they have to submit their financials, and then they have to resubmit them every year on the contract, my understanding.
It's complex. And
it's
also,
you're
right, and how you get the contracts, you know, you have preferential treatment to get them under a prime contractor, and you have 10 years to graduate. There's a whole art.
Yeah, there's a whole thing to it. Yeah. So anyway, I just kind of put that in there as an example of working with, you know, your accountant on stuff. But and if you, you know, like I said, I could easily send you my notes on how to do it if you are interested. Okay, so where to set up your business? We kind of talked about the different states. We kind of got into this a little bit. Like I said, Washington, D.C., there's a franchise versus personal. You start off with the FR 500 form. Maryland, there's the Form 1. And just a little caveat with that, what they're really looking for is personal property that you're using in your business, not maybe stuff you're selling. So a lot of times people list like their desk, their computer, you know, maybe $900, and you know, and you're off. And so the cool thing with Maryland is you can do that online now. It's like its own separate thing, and you can also do an extension for 2 months every year. Again, Virginia is the easiest, and then like Pennsylvania, Berkheimer is the private company they use to keep track of all of their stuff. So if you don't do something at the state level with Pennsylvania, you're going to get a letter from Berkheimer. So, and kind of again going back to the LLC, what we talked about, if you're in Maryland and you have a local business as an LLC, you're considered a domestic company. If you're in Delaware and you're operating here, you're a foreign company. If you're in Canada, which I think, you know, some Canadians join these calls, and you operate in Maryland, you're alien. So it's different. It doesn't get you out of fees though. So like if you're a foreign company or a domestic in Maryland, you're still paying the $300. And every state may have like their own thing, like Delaware charges $165. So, you know, you may end up racking up a few extra expenses if you're, you know, in a different state. So, and commonly asked questions. I'm just going to share my own story with you. I had a different name for my company, and every once in a while I'm on GoDaddy, and I was just trying to see if there was a cooler, you know, URL or company name. And that's how I got Potomac Advisory Group. It was available, and I'm like, how is it available in DC? So I kind of worked backwards from there, got the URL, you know, got the EIN from the IRS, did the LLC search with the Secretary of State, did the articles of incorporation, The business code, the reason I put that in there is you have a business code, depends on the system, but it's usually like a 6-digit code. It just needs to be the same everywhere you use it. And this kind of goes back to the 8A. I've had some people where, I'm going through taxes and sometimes the code changes over time because, the IRS or whoever changes it. And you just need to make sure that code is the exact same. Otherwise, you may get a letter. So like if you're dealing with your tax return, it's on Schedule C, it's the business code there. You just need to make sure if you're doing government contract or other things, you're using the same digit code. QBI, that's the big thing that came out of the 2018 taxes, qualified business income tax, deduction. Initially, it was for a few places, a few people, but they expanded it tremendously. It even applies to rental properties. So typically, when you're putting your tax return together, a lot of the software will calculate that for you, and it'll be near the bottom of the first page. But that's just a huge benefit to being self-employed and to having your business. The next bullet point kind of goes to what we kind of had a question a little bit before in terms of commingling. In a perfect world, you're going to have a separate bank account for your business. You're going to have, credit cards directly for it. This is why some people go out and get it done in Bradstreet and try to work on their business credit. Just so you know, business credit is different than personal in that personal credit, people are sending stuff about you automatically. You don't really do anything. You're not really paying for anything. On business, it's different. You're actually working with a company. You're sending in information to build up your business credit. And at some point, ideally, you'll be able to have everything as the entity, having its own credit instead of, you dealing with your own personal credit. And I think that's kind of going back to the resources again, like having a lawyer, legal Zooms, then business. I don't think there's any new questions.
And by the way, Hans, just to go back to the EIN, and not everybody actually may know what that is. You just basically, right? This is our basic 101 class, right? So make sure everybody understands.
This is the employee identification number. And just let you know, some people, like, even if you didn't have your own business, some people will go out and get an EIN. So that way with their employer, they're actually giving the employer an EIN instead of your social security number to give you a little bit more security protection. But yeah, so you go to the IRS, like you have to do it during business hours. And a lot of times you can get the PDF right there. Just to caution you, there's two options. There's like one where you get the PDF instantly and one where they mail it out to you. Just to let you know, the IRS will never look up this number for you. So if you ever lose the number for whatever reason, can't remember it, can't find the document, you're never going to get it. You just have to do a new one. So yeah, there's some limitations with the IRS. There's a lot of limitations with the IRS. So okay, so taxes. Talking about pass-through or not, and kind of reiterating what we've already talked about a little bit. Schedule C, that's what you start off with. If you don't do anything else, if you're just like, I got an LLC with the state, you're probably a Schedule C. If you don't do anything at all, you're a Schedule C. If someone gives you a 1099, even if you do have a W-2 and you're working full-time somewhere, that's going to create a Schedule C, okay? And actually, in the last few years, they separated out the forms to alleviate confusion. Now it's called a 1099 NEC if there's income. You can still get a 1099 like miscellaneous if there's like rental or royalties or something like that. So that's what happens initially. And like we talked about the 1120S, that is your S corporation. 1165, or actually it's 1065, it's that's your partnership tax return. 1120 is the C4, and then 990 is your nonprofit.
And Hans, could you go back and just explain what a pass-through is?
Yeah, so a pass-through, okay, so basically, if you're doing like a partnership or an S corp, it's just there's no taxes of that entity itself. Everything is getting passed through to you on a K1. And like we talked about, you may divvy things up a little bit if you did payroll. And so then you have a W-2 flowing from the company to your personal, and then a K1 flowing from your company to your personal for the remainder of the income. But there's no taxes. Now, there are exceptions to that rule. So like I have a company in Maryland, one owned by two people, they're an S corp. One person lives in Maryland, so they don't pay taxes at all, nothing. The other person is in DC. So because that person's in DC and it's a separate state from where the S corp is formed, they have to kind of send money back and forth between the states, and you're the one actually doing that through your tax return. So, you know, it's all passed through, but like I said, if the entity is in a different state than one of the partners, there may be something that has to go back and forth that gets, you know, from the company, and then it gets evened back out on their personal. And then the 1120, the C corp, you know, one of the downsides of that is you can get into what's called triple taxation. So, you know, the corporation's taxed, the dividends are taxed, you know, so like I said, people usually only do an F corp or a C corp if they absolutely have to. It's not something they do out of the gate unless they have to. So accounting, kind of talking about, you know, do it yourself, using a professional. A lot of people use QuickBooks. That's kind of the standard, I think. Used to be there was a desktop version. Now it's all just online, period, which is actually pretty good because when they did have the desktop, they only supported it for 2 years at a time, and it didn't work with the online very well. Excel, some people, you know, graduate from the napkin method, I'll call it, and they use Excel. There's nothing wrong with that. If your stuff is fairly straightforward, you can simply have an Excel to, you know, run through everything. Accountants World, that's who we use for accounting and payroll. It works perfectly together. So it's kind of like we have a lot of people that kind of graduate from QuickBooks to Accountants World. Bench.co, they're in Canada. They're just very, very popular company. A lot of people use them. You send them all your information. They have a team of people that work with you to keep it straight. The downside with Bench, like if you leave QuickBooks and you come over to say us, everything flows over automatically. We can just integrate it. If you leave Bench, there's no outboarding integration per se. They just give you your ending financial packet, and that's it. So, you know, so you kind of have to weigh these factors when you decide what you want to do. QuickBooks, again, they start off with like a certain fee. Usually it's introductory for the first 30 days or 90 days or something like that. So it can get expensive depending on what you're doing. And I'll give you like a small story. Like if you have a company, say you're an engineering company and you have different jobs, and you're trying to do job costing, so you know how much that job is costing by itself. When you're using QuickBooks, you're talking a subscription now of like $130 a month. So it's just, you know, as you need different things, there could be an expense. But their initial thing, I think, is like literally like 12 or 14 bucks online. It's just, you know, your bank account flows in, and you know, you set up a chart of accounts. It'll ask you what your business is, and then it will help you set up your chart of accounts. I know that's a lot of stuff. Do you guys have any questions about accounting on that? Nope. Okay.
I have a question.
Sure.
So I know where I went with my background.
I know I see your background, just not your face.
I disappeared, so I'm just gonna, I don't have time for the technical. Oh, I know what happened. My camera was off. Okay. So can we go back to the DBA?
Sure.
So if I have Equilibrium Ministries and I want to bill someone, can I send an invoice with just Ramona Antoine on it? Can I create another like entity name? Like Sharon and I came up with one when I saw her a couple of weeks ago. So can I send an invoice? It just feels like it's not right. So
No,
can
no,
I invoice with like Antoine Coaching and Consulting, even though the money is going into Equilibrium Ministries?
yes, you can. I mean, part of it is everyone recognizes there's the ebb and flow to these things, right? Things develop, names change. A perfect example is, Warren Buffett, right? Or he started that company. He didn't start the company, but Berkshire Hathaway was his biggest failure. He bought this company, it totally failed, but he kept the name for everything else. So, as you have your business and things happen, you're going to change. Like I changed my name because I thought this, cool URL came available. And you may want to do the same, seriously. Like, it's really frustrating for you to develop a name and all this stuff and then realize the URL has to be something really strange, right? Because everyone loves .com, right? Still. So, but yeah, there's nothing wrong with it to do it that way.
Okay.
So,
and the
yeah,
EIN, I just still put the EIN for the business account that I have.
yeah, I mean, and yeah, exactly. And you can get other EINs very quickly. So like if you needed to get a second EIN, then, as an LLC, you can do that.
Okay.
So, I mean, like I said, there's just a little wrinkle that as a sole proprietor, you can only have one EIN, period. But as an LLC, you can start as many LLCs as you want and have an EIN for each one.
Liz?
Yeah, I'll just share. So I think the second time you talked about the EIN it might be a little bit confusing. So I have a business called Pinnacle 360. That is my LLC. And in the middle of the night, I needed something, the name Brightpoint Coaching came up for me. So I did that in Ohio, we call it fictitious name. So, but it's still tied to Pinnacle 360, and anything that comes in, and I could do 5 or 10 of those if I wanted to. They're still tied to my LLC, and really what you care about is the account, because the account is where the money's going to flow, regardless of what the name is. Does that make sense?
That's very helpful. Yeah. So
Okay.
I just need to create another LLC.
You don't need to create another LLC or an EIN. You can just do it the fictitious name or
Fictitious name, yeah.
DBA. It's known as DBA.
Is that relatively straightforward, Hans?
Yeah, I think it's relatively straightforward. I think part of the reason, people, there's other reasons that you want everything to be correct in terms of naming. And sometimes it depends on who you're working with. Like I work with the Treasury Department. So if they audit me, they want things to be in the same name. But if you don't have that, then, it's fine. Like I have a bank account under my old company name, under my new company name, and I use one as a feeder because if someone asks me my account information, I don't want to give them the account that has all the money in it because I'm afraid of something happening. So I have one account that just all the money feeds into and I just move it. So yeah, hopefully that helps you.
Well, Ramona's actually looking to do business with the government. So that could be a consideration for her to keep things consistent, Hans. Is that what you're implying?
Yeah, exactly. Because I think a lot of these organizations, they just want a clear line, and that's why they ask everything to be named the same. But even with the IRS, when I do taxes, I have to get this EFIN thing, and it was a couple of years before I updated everything. So you have time to make adjustments if you need to make adjustments. Yeah, it's not like they just cancel you. They just say, can you make this change? And then you change it.
Okay, thank you.
So yeah, but yeah, you definitely want a business account, of course. And talking about payroll, this goes back to the S corp, but a lot of people just, have payroll anyway. As a starting person doing payroll, people usually look at once a month, okay? And the thing about payroll is it's not that scary. You can just turn it on, turn it off as things happen. I had one client who didn't get the contract he thought he was going to get, so he turned it off for a couple months. So it is fluid. the reason I talk about payroll is these are just some examples. Gusto is an online service. My understanding is it's very low contact. I think there's a text thing, and that's pretty much it. They don't have a phone number. You can never talk to anyone. QuickBooks, obviously, they're pretty popular. I have seen people make mistakes with QuickBooks and not understand. And a perfect example is in Maryland. In Maryland, there's a 5% for the state, and then you have a county pickup, which is around 3%, depending on what county you're in. So QuickBooks didn't tell them, they didn't understand that they didn't have the county pickup, so a whole bunch of people owed a bunch of money to the state of Maryland at the end of the year. ADP and Paychex are both huge companies. They have turnover. So a lot of times when you're dealing with like a local accountant, you're probably talking to the same person year to year. If you're talking to one of those companies, there's just a lot of turnover, of course. And one of them is good with tech, and the other one was good with customer service, but they're both not good at either, at both of them. So like ADP is good with customer service, Paychex is better with tech. And then Accountants World is the system that we use, but there's people all over the country that use it. And there's all these other payroll systems I can always talk about if you guys had a question.
And by the way, it's not to say you have to use a payroll system. It's just that it would help you to prepare, to gauge what your taxes are going to be, right? If you just want to sort of, understand, hey, I have to lop off this much from my, from my income and just sort of set it aside, you can do that too. But the payroll system will just sort of help you track better.
It gives you more normalcy to what you may be used to as a W-2 employee in the past. The other thing that payroll kind of helps you, it helps you with budgeting, it helps you with withholding, but you can also in the system kind of think about all the other things that you used to have that you want to have, like, healthcare, vision, dental, 401k, FMLA payments and things. So you can kind of take care of a lot of that stuff through payroll. And then of course, if you're a growing company, maybe you're going to hire some people. And so, people usually not always want a check. They want to have a payroll and direct deposit and all these things. It's like a normal company. So yeah, kind of marketing. I'm just going to kind of go into this a little bit. So this is just a pet peeve of mine, but I think it works. When you have a business, you want to have a business URL. Again, I use GoDaddy. You want to have a business email address. You don't want to give people in a business setting your personal email address. And Alexa, stop. Sorry, Alexa, what's going on? And so, and if you give someone like an AOL account and things like that, they're just going to know, that address has been around for a while. So, you want to have a business URL, business address. I put WordPress in there because it's like, free. You can do a really professional setting in there. 48-hour logo is just a company that does logos. You basically tell them kind of what you want. People bid from all over the country, all over the world actually, and then you can kind of get into your logo. Last person that did my logo was out of Saudi Arabia, I think. And then kind of getting from that, as your business progresses, you get into trademarking your logo or your name and all these different things, which gets into the legal realm. But, those are things to think about.
But just so everyone knows, since clearly this is not a marketing training today, we at BoomerWorks have many marketing trainings that we have done with some wonderful speakers. And I'm going to put the page in the chat for the videos that you can peruse. And we are always adding to that. And one of them actually down there is a deep dive on using WordPress.com to build your website. So there's a lot of opportunities for you to avail yourself of some marketing training through us for free.
Yeah, I guess it was just a pet peeve because I stand myself out to other people, and then when I see other people that I work with who have small businesses and they do something, it just kind of jumps at me a little bit.
It's great, Hans. And also the professionalism of even how you're invoicing, right? To Ramona's point, right. What kind of brand do you want? Not even just the tax and the accounting side of it, but just what's the image you're trying to put forth with the employer.
Yeah, and speaking to invoicing. invoicing. I don't know that that's actually in one of my slides, but it just makes me think, you know, with COVID, a lot of people are doing things a little differently. Like when you go in the subway, they're asking for a tip now, which, you know, was unheard of a couple years ago. Oh yeah, like, yeah, oh yeah, everyone, like you go to any restaurant, they're like, what tip would you like? You know, you can buy
Oh, you mean in restaurants? Yeah, sure. I'm sorry. I thought that said the metro.
No, no. And then, so with that, a lot of people reverse their billing. So the IRS does this. They've done it for years. If you pay your bill online with the IRS or a lot of the states, they're going to say, well, if you do a check, we're going to charge you $2. If you do a credit card, we're going to charge you 2.8%, whatever that is. They just reverse the charges. So there's a lot of companies, you know, you can set that up with QuickBooks, et cetera. Some companies have it where you can reverse the charge and they pay it. Some places just put like an extra fee in there to cover that. So, you know, just to kind of bring that up because it is important. And if you're a small company, you know, that could be $3,000 or $4,000 a year in those fees that you're not thinking about. Okay, so again, kind of talking about what your employer used to pay for.
Okay, well,
I'm sorry, did you have a question?
I have a weird question. So
Sure.
I have been told that like my quarterly estimates that I pay, I can pay that online, and my tax guy sends me all that stuff, and he sends me the little thingies, and I don't know how to get that online because I don't have checks, and it's really hard for me to pay those. Do you know how to do that?
Well, yeah, so number one, yeah, I can walk you through that. But basically, if you just go to irs.gov, you just type in payment. I mean, when you type in the payment pieces, it'll ask you if it's an estimated tax. Just to clarify also, or a caution, it's easy for the IRS to apply things the wrong year if you're not paying attention. So you want to make sure it's an estimated tax for 2023. Otherwise, they may apply it to 2022. You know, that.
Okay.
Or
Awesome.
sometimes when people are trying to pay their regular taxes of 2022, they put it in the estimated tax bucket for the next year. So,
Okay.
but the other thing is, like, your tax professional, when you do your taxes itself, if you have like a set amount you're doing each quarter, you can actually set that up in your tax return when you transmit it in April, for example, and then like every quarter it'll just come out automatically. So you can automate that as well. I mean, sometimes things are fluid. You know, we make adjustments the last quarter or something, but that's one way you can do it.
Awesome. Thank you. Sorry to.
No, it's fine. Also, just to let you know, like the last couple of years, the IRS has worked a lot on tech. If you go to irs.gov, like right in the middle of the page on the top there almost, there's a thing for your own account. And you can click on there. They verify you with ID.me, which is all the government.
Yeah.
Do anything. And so once you're verified, you can actually see any statement. You can pull transcripts, all these types of things. And you can also get payment stuff.
All right, cool. Thank you.
Yeah, actually went to the IRS conference last week in DC, so my mind's a little musty considering all the great IRS classes I just took. But they all talk the same. They're like robots. They're reading the manuals to you basically. Okay, so these are kind of things like we talked about that you kind of want to replicate maybe, or things that maybe you didn't understand what the employer was paying for you, or things that you need to kind of understand moving forward. So like one example is some people say, okay, well, I'm working for this company. They gave me an opportunity to become a contractor, start my own company and work for them. A lot of times I'll throw out a number like 30%, a bump above what your pay is usually what they're paying for you, which includes, you know, your PTO, your vacation, your medical, just all of it together. And so going through these items like FICA is 7.65%. You're paying half, your employer's paying the other half. When you're self-employed, you know, you're paying more of that, of course. And Medicare, health insurance, life insurance. A lot of times when you work for someone, they give you like a $50,000 thing for free, and then there's a few bumps from there. But that's something to think about. And actually, as your own person, disability insurance is something to really think about, because if something happens to you and you're, just not able to work at the highest capacity, that's something to really think about. And disability insurance is really inexpensive. So, then life insurance, unemployment insurance, you're not always required to do that. Some states have specific rules. So if you're an S corps in Virginia, you're fine, you don't have to pay it. If you're specifically an S corps in Maryland, you have to pay unemployment insurance. And I've actually gone around and around with the government employees on this, because in theory, you don't get unemployment insurance if you're the one who caused the problem. And if you're the owner of the company, maybe you caused the problem. But they make you pay in Maryland if you're an S corps, and you will get that if you need it. Withholding, like we talked about, the federal, state, local, a lot of it's pretty straightforward. Like I said, Pennsylvania has some specific things. The big thing with Maryland is the county pickup, which is by county, again, around 3%. PTO, vacation, sick time budgeting. And this also helps you with your own business think about these things, because you need to have vacation. And, the hardest thing, which my wife yells at me all the time about, is you need to have regular hours, where you go, hey, I started at 8, cutting down at 5. That's not what happens when we're working for ourselves. But, this kind of makes you think about it. Continuing education. So if you have anything to continue with your certifications, et cetera, of course, all that's deductible. What's not deductible is like a master's program or a bachelor's program. Somewhat common sense, but people do that. They'll put it on their tax return and they'll get in trouble for it. Travel, of course, anything for work is a deduction regarding travel. Kind of where it gets a little confusing is, if you travel overseas, if it's like a 3-day trip, you could probably write off the whole thing. If it's like a 10-day trip, then you're really looking at an allocation between your business and your personal enjoyment, on your vacation.
And by the way, Hans, I can't remember if you have this in an upcoming slide, but I think it's worth mentioning from a tax perspective. For those of us, which is probably most everybody here who works from home, right? What you're allowed to deduct from your home in terms of your square footage. I can't recall. Do you have that in the slide?
I think we do, but I can talk about it, of course. But yeah, so basically there's 2 methods in terms of your home business, okay? One's called a simplified method, and then the other one's, I don't know what it's called, so it's not simplified. So simplified is you're just doing $5 a square foot. So say you have a typical room in your house, and you're saying, that's my room, 12 by 12 or 10 by 10. They're taking off like 100 square feet times 5, and that's your deduction. What it usually works out better though, and that works the best if you're like maybe a renter and yet your place is pretty small. Most people have homes and stuff. It works better to do the detail. And that's where you're like listing everything, like your HOA, utilities, your mortgage, tax, interest, insurance for the house. Insurance is a big one people forget. And you're putting all of that as an indirect expense to the business. And so what happens in your tax return is you'll get that, say, 10% thrown into your business, and then the rest of it will just be reduced by your Schedule A. You won't have it as big as a Schedule A deduction, but that's fine because it's usually better for you on the business side. And a little caveat to that is, in order to get the home business deduction, if it's a rule, you have to be profitable for that year. So if you're negative, say $500, there is no home office deduction that's going to show up on your return. It's a rule.
Question for you on the continuing education piece. So I was one of those people who had the understanding that if you're pursuing a master's degree for the services that you're providing, that would be deductible. I thought that was my understanding from my accountant, but you're saying that you can get a certificate, but not a master's?
Well, let me back that up. You can set up your own reimbursement program, like anything else, like your company does, right? You can set up a program for yourself to, have the company pay for the education. So that is true. I guess what I was really thinking about is on people's personal taxes, because it kind of flows into personal, is they would put on there like a master's degree you know, that's not possible. But yeah, the company itself could do that.
Okay.
So yeah, thanks for the clarification. Oh, and just other expenses people don't think about, you know, computer, internet, cell phone. Even if you're just using it part-time, you can still do an allocation. Those are just kind of like low-hanging fruit that people always forget about. And it kind of goes back to the accounting piece a little bit, whether you do an Excel or QuickBooks or whatever. If you have a separate account and separate credit card for these things, it's just easier. You don't have to think about it as much. It's just really hard to remember at the end of the year. So retirement, I'm going to give you a cautionary tale. Person in Maryland, they bought and sold hotels, and you know, in 26 different states. They had difficulty with their business, and they didn't have any of these extra buckets, and so they didn't have a retirement plan, and they were getting close to 70 years old. They had to do a bankruptcy, unfortunately, and they didn't have a retirement plan. Whereas if you're in like a 401k or an IRA and things like that, there's a lot of protection in terms of, you know, having to do a Chapter 7 or 11 or whatever. So it's something to think about. I know a lot of us, as owning our own companies, we get excited and we're like, this is where I'm really making my money. But you really need to think about the retirement bucket. And kind of going through like the list, there's actually a slide I can always share with someone, but you know, the IRA is kind of like where everyone starts, right? You can do like $6,500 in an IRA, a little bit more as you get older. Simple IRA is a little different. That's like where you could do, say, $18,500 a year. So if your company only makes $18,500, you can do a simple IRA. And it also speaks to different time frames. So like a simple IRA has to be in place, funded by January 31st for the prior year. An IRA, you have until April 15th, roughly. A 401k, whether you do, you know, solo or what have you, it has to be kind of in place by October of the year. So like if you want it in place for, you know, 2023, you need to have that in place by October 1st. You can't do it in December for this year. The SEP, the Simplified Employee Pension Plan, that's kind of like a lot of the last gasping for the financial planning for the year. And the reason I say that is that's the longest thing you can do. So if you did an extension until October 15th of this year, on October 15th, you can still make a contribution to a SEP for last year. And all of these also have different amounts. Like I said, the IRA is $6,500, and again, it changes every year a little bit, goes up. Simple IRA is $18,500. 401k, your contribution is 22, but with company contribution, you get to like 58. A SEP is roughly like 60, but with a SEP, you have to make 4 times that amount. So if you make, you know, 240,000, for example, just throwing a number out there, then you could put 60,000 in a SEP. Now, pension plan, cash value plan, I'm just shooting for the moon here. You're making $1 million, you can do those plans and put the max, which would be like $265,000 in a pension plan for your company each year. But the plan designs are important though on what you choose, especially when you get into the 401ks and the pensions and such. And there's that star there, the Form 5500 comes out every March. And that has to be done through your plan administrator. You don't have to do that for the IRA, the simple, or the SEP, but the others you do. And if that is not in order, the plan will fall apart and they'll make you take it out of the plan. So say you work for a small company, and I've seen this, and they had some problem with the plan. Maybe they had to have a certain participation. They didn't hit that participation limit. They actually, you know, the whole thing kind of unraveled in March and April of the next year, and they had to pay taxes on all the money that they had deducted on. So some of the plan design, you know, is important. But I guess the biggest reason I'm talking about these things is that don't disregard it. It's very important. And what plan you're in kind of depends on what's happening with your business. You know, like I said, the 401k is the most common in terms of, you know, what you used to do as a W-2 employee. You can do a solo 401k, and if you bring people on, you know, you can offer that to them. So,
Liz had a question.
Yeah, specifically on the solo 401. So I opened up that on 2 businesses last year. One of them was my husband's. So it was a godsend in terms of taxes. But my question is, I've got a solo 401. What happens? Because I use 1099s, interns, and so I'm thinking about possibly, I hate to say it, thinking about bringing somebody on. So what happens to the solo 401? Does it just hang out there and I can do another plan for something?
Yeah, so, and that gets back to when you're talking tax savings, just to give an idea on your federal and state together, typically you're saving about 1/3. So whatever you put in here, you get a reduction 1/3 on your tax. But yeah, to your point, like when you bring someone on there, yeah, you would probably convert the 401k at that point to a company. And kind of like the safe harbor is one of the examples I put in there. There's a lot of ways to do 401k design. We work with 36 companies. Well, like with safe harbor is an example where, like you say, I'm going to give 2% to everyone, no matter what they put in. And what people do is usually the opposite. Maybe they'll do 3%, but they have to match a certain amount to get to that. And then you're also doing different clips, or basically scheduled where people can invest. Some people schedule every year. Some people will do like you don't get anything until 5 years, and you get what's called a clip, schedule. So yeah, those are all considerations. But yeah, you would move it. And the other counterpoint to this is if you have a 401k, just like with your other jobs, if something changes and you're not going to use it anymore, you could possibly leave it there, but then you can also convert it to a self-directed IRA, which is what a lot of people do.
Okay, great. Thank you.
Okay, so insurance is another aspect. Kind of what we talked about with Shira, the LLC is kind of a protection as well, but a lot of people look at it in a different way. They do it through the insurance side. So if you had an apartment building, you might do an LLC, but you also might have like $1 million umbrella insurance to kind of cover incidentals. So basically, with insurance, again, there's health, there's life, there's vision, there's dental. I'll talk about FSA and HSA because a lot of people ask me about that. And FSA is basically where you're saying, I think I'm going to spend $1,500 this year. And it's a reduction on your taxes. If you don't spend it, you literally lose it. Sometimes they give you until January as a catch up. And HSA is a health savings account and actually gets invested in the market. It doesn't matter if you use it this year, it just rolls over to the next year, et cetera, et cetera. So usually people like the HSA, how that works better. But it's also tied to your life insurance product. Usually HSAs are tied to a high deductible plan. So, there's some things you have to look at. So what I would say is every fall, usually people, renew their insurance in November, in the fall. Just, consider an HSA, see if your plan offers it. It'll be a lot better for you down the road. When we talked about disability insurance, workers' comp, again, that's more of a factor of when you bring people on. But, as a function of payroll, you get a discount on the federal level for these things when you're paying on the state level as well. That's more to unemployment, but it's still there. And so with the accountant, like we talked about, FICA and Medicare, key man insurance is another thing. A lot of people do this, like if there was a partnership and something happens to one of the people, then the insurance would pay to basically help that person buy out the other shares. Maybe the shares go to their heirs and they're able to pay that out.
Can you do a key man if you're a solo?
That's a great question. So I don't usually see that. I mean, usually you just have insurance for yourself, We do insurance policies for a lot of people all the time. But key man is usually when you're trying to buy someone out, that kind of thing, if something happens to them. So yeah, that's a good question. I haven't seen that. But I mean, really, like for yourself, you know, you would just up your insurance policy, say, you know, like this kind of gets into another conversation with wills, right? Most people either don't have a will or it's just really outdated, and the same kind of falls into the insurance bucket. And maybe they're underinsured, maybe they're overinsured, it depends. But you know, there's a lot to just the insurance part.
Yeah.
So, I mean, a lot of times I say to people, hey, what do you want to do? And, you know, we do a lot of $2 million policies. So I don't know why, but that just seems to be the number today. Unemployment, again, as spoke prior, you don't usually have to pay that. Some states have rules like Maryland with the S scores. You can have an executive reimbursement plan, again, easier to do with the S score or the C score rather. That's where basically you're paying your medical payments through your company. You know, and I've seen a lot of people do this with companies too, where, you know, maybe you have a couple of people that are partnerships and maybe you have like a company reimbursement for, you know, auto service or what have you. And there's like formal and informal processes depending on your population, how you want to track that.
So if your spouse is a W-2 and has FSA or HSA, would you still recommend doing one for the business?
Well, no, I would like his rate is probably pretty good because he's getting a big company rate, you know, compared to what you would get. So I would probably just lean on him for that. Like a perfect example, getting the dental insurance with Delta Dental, you know, you get a better rate once you get 4 people. 4 people and above, it's kind of a slightly nicer game. So yeah, I would say as a sole person, you're not going to be able to get the same rate he's getting for some of those benefits. So, and that's usually the case. So most couples, if one person's a W-2, that's where they're getting their benefits. Not always, but sometimes. Okay, so business tax concept. So when you have basis is basically you buy a car, $5,000. That's the basis in the car. Okay, and say again, thinking about cars, when you put it on your tax return, you're probably going to depreciate that over 5 years. Sometimes you can depreciate it over 1 year. So like if you have a windfall year, you made $1 million, you're like, holy cow, I've got to get some expenses in there. Maybe you go out and buy a brand new Tesla in December, and you can write off the whole car in that 1 year on a 179 deduction. But basis is important not only in these items, but also in your business. So more so like with S scores and partnerships and things. So like a perfect example is say you had a loss of $100,000 1 year in your business, and you had 0 basis on your tax return, you're not going to be able to claim any of the loss. So say over time, you're lending money to the company, you're building it up, you have a $250,000 basis that you're tracking on your tax return. Then if you have a $100,000 loss, you can easily take that deduction that year. So basis is really important to think about. Again, your accountant's tracking that. Hopefully, I'm sure they are. But it's something a lot of people don't think about. Now, NOL, net operating loss. You know, people yelled at Trump for that. Biden did it. A lot of people use it. It's basically when you have a loss in your company, you can carry it back a couple years, forward 20. It's just a very common business practice. It's kind of like when you sell stock at a loss and you're carrying forward that loss from year to year. It's just more of a business concept doing the same thing. And it's like semantic point to carry forward. Sometimes you carry things back. It's really important when you're doing your taxes and you're working with accountants. You've got to start with the earliest year moving forward. Sometimes people jump in the middle, and that's not a good idea. And so, you know, you can have a loss in your business. Now, to kind of clarify this, back in 1986, they got rid of the ability to have a business just for a loss. Okay, it used to be you could have a store, always have a loss, and it was a tax write-off. That went away in 1986. So if you have a private business, say, let's just pick an LLC, you need to make money within 2 of 5 years If you don't, that's okay. You can still say, hey, here's my business plan. I'm really trying to do something. But the IRS may have the idea that this is just for a loss. And if they declare it as a hobby, then you get the expenses only to your profit until you're zero. They won't get any negative deductions if they figure out or determine that you're a hobby instead of a business. So we kind of talked about this a little bit before. K1, W2, 1099. If you hire a contractor, some years it's going to give them some money. You give them a 1099 at the end of the year, that's fine. There are some Department of Labor, definitions that kind of slip in there sometimes where, if you're giving someone, like they're coming to your house, you're giving them the workspace, they're only working for you, you're giving them all the tools for, say, the computer and everything, at some point, are you crossing that line for them to be a definition of an employee? So you have to kind of be careful about these things. If you have an employee who should be a W-2 and you're just giving them 1099 year to year, they get mad at you and they file an unemployment claim or something, that can get you into a problem. So just something to think about.
And it's a very complicated area of law, employment law.
Right.
But bottom line is their work self-directed or not, right? If you're hiring a contractor, a consultant, somebody like that, they're doing their thing. Like you give them the project and they go off and do it, and then they'll check in with you. But if you are directing their work, you're managing them, then it's likely going into the category of they're an employee, more or less, without getting into nuance.
Yeah, absolutely. Especially if the employee does the same type of work for other people, like accountants or whatever. So, and then again, the K1 is people say, how does this money flow through? Well, when you have a business like an S corp or a partnership, you get a K1 on whatever you did in payroll yourself. And another, bonus of doing W-2s to yourself, payrolling yourself, a lot of times it's just easier for people to understand. Like if you go to a car dealership, they know a W-2. If you don't have a W-2, you're giving them a business return. It's just, not as easy for them to understand sometimes. So bonus treatment, something to be careful about when you're payrolling yourself, et cetera. If you give yourself or if someone gives you a large amount of money, it's considered as additional income. So you probably have always noticed that if you get a bonus or something at the end of the year, there's a much higher tax rate. And that's why that is. So you just need to have, some planning in here, and you don't want to sit there and go, okay, well, I've got this extra stuff coming in December, and it's going to be treated as a bonus. And the reason I wrote draw in there is, if you're not doing payroll, you're not doing any of these things, it's still fine. You just take money out of the account, pay yourself. It's just considered a draw. That's all it is. And so the draw, it's just like anything else. Like whatever your profit is at the end of the year minus your expenses, your income minus expenses, that's going to be your taxable income. Whether you leave it in the bank or you take it out as a draw or you pay yourself for something, it's all going into the same bucket. Which is also one of the reasons people stay away from C corps in particular, because retained earnings becomes a problem in terms of categorizing the fund from year to year. Sales tax, the reason I bring this up is it's become a really huge thing, especially the last few years. There's this thing called a nexus of work. So like say you're in Maryland, but you do half of your business in West Virginia, then you can, consider to have a nexus of presence in West Virginia. And so everyone's kind of jumping on this bandwagon. Perfect example is it used to be when you bought something from Amazon, across state lines, you didn't get taxed on it. Well, now you're taxed on it no matter what, based on whatever state you're in. So, that's why it's important to know the rules by city, by county. Like I said, they call it the nexus, especially when you're in multiple states, online sales, like I was talking about American or on Amazon. And there's companies that will do this for you. There's this one company online, it's like $250, and they'll do an analysis and, do all these things. So it's just something to be aware of. If you don't have anything but a service, you might be fine. Again, it goes down to the state rules. Maryland has some stuff that's very specific. specific to different industries, such as security, furniture sales. So like if you sell someone furniture, well, you're just selling them the product. But if it's a hut and you got to put two things together, well, now there's a service fee on top of it. So you really have to get into, you know, your municipality as to what the rules are.
So how do you pay sales tax? So like I wrote a book and I've sold some copies. Some it's online, so for Amazon, people just buy it and then I get, you know, whatever royalty into my account. But when I go to an event and I sell the books, what am I supposed to do with that?
Yeah, that's a good question. So in theory, it's supposed to be, you know, wherever that event is, then you would pay sales tax to the local place, which is kind of burdensome. And then the company, which I don't have the exact spelling right now, but it's called Avalara, is who I usually recommend. So if you have a question, I mean, but you know, if you're doing a book sale, it's not like anyone's like following you around, you know, you could probably just do sales tax in your own state, you know, for whatever that stuff is. That would be my guess. So, you know, logistically, there are rules where like if something becomes a little bit too burdensome, they're not going to ask you to do, you know, every little thing. So, but yeah, you remind me of, I used to go to, what is that, National Press Club, and they have the authors, right, on the books. So there was this one book, Queen Elizabeth CEO, and the woman was dressed up like Queen Elizabeth from the 1500s or whatever. It was pretty cool. So, I don't know if you dress up for your book signing or whatever.
I wear
okay.
yellow, there's a sunflower on it.
So you're never going to be audited, hopefully, but you want to prepare as if you're going to be audited. So the chance of you being audited would be around, you know, 1%. If you make over $1 million, it's over 10%. You know, like people are talking about Trump getting audited, but with the amount of money, he should just have a full-time office for the auditor, you know, that he deals with. So it just happens that way. There's certain things that can happen, like if you're in a certain industry, the IRS has an idea what's happening in an industry. And if your tax return is like really far out of these alignments, you know, that might create a flag. And so what happens is typically they'll group so many problem returns, they send to the local office, they do whatever they can manage out of it, and that's how they get selected. You know, one thing that kind of happens too, and I see this with clients, you know, they're just really busy with their work, and I say, well, I need your expenses, and they give me a bunch of zero, you know, things that end in zero. It's like, this is 10,000, that's 5,000, that's 4,000. Obviously, that's not an accurate number. So you really want things to be as accurate as you can, so that, you know, it doesn't have a problem. As far as dates go, a lot of people say, how long should you retain documents? If you're a lawyer, you're going to retain them for your entire life, probably. Most people, it's okay to do, I would say, 7 years. Typically, like the IRS doesn't look back after 3 years in most cases. They will go back to 6 if they think it's a large amount. If there's a fraud involved and they find out, there's no statute of limitations for that. There is a quirk I've seen with states. Different states have done this. I've seen this in Ohio, I've seen it in Maryland, or what they'll do is they'll say, prove you filed this tax return 10 years ago. And the only way you can prove it is if you have the tax return, a copy, and also the W-2, which has the state information on it. And a little thing that people don't realize is, how do the states get your information? They pull the IRS record, and that's where they know your income. The IRS does not keep state level stuff. So if you don't have the W-2 proving you paid money to the state of Maryland, and you can't get a hold of that W-2, you may have to pay it again. So if you do nothing else, keep your W-2s for at least 10 years. So I don't know why they do that, but I've seen that a few times. Well, there is record tax. I was ahead of myself. Yeah, like I said, 10 years state. If you're a lawyer, people keep it for life. You know, and this kind of gets into business too, maybe a little bit outside of the pocket, but you know, security. We deal with a lot of things with the IRS. The IRS doesn't require the same standard as the SEC because we deal with investments. we're at a much higher thing. And so, you know, the biggest thing I probably have in my office is a shredder that cross shreds everything. I've actually seen CPAs throw out trash, like tax returns in trash. So you just don't know. Encryption, you know, making sure not only are your emails encrypted, hopefully, but you know that your computer is. So if someone were to steal your laptop, it's basically a brick. Parallels is kind of what I was talking to Stuart before this. I actually use Apple for everything because it's a more stable platform. And then I use Parallels to run the 1 or 2 programs I need for Microsoft. And we also use, you know, security portals, virus protection firewalls, all that kind of stuff. But I just kind of like a little side note in reference to the records retention, just some of these things to protect what you have. Even the state of actually Baltimore had someone open an email and they had to pay a ransomware person a couple of years ago. So it happens to everyone. So do you guys have any questions for me about anything? I know we've covered a bunch of stuff.
I have a question around cyber for your last slide.
Sure.
So recently, QuickBooks had a thing where we had to be some cyber thing we needed to do. I don't store any information on my side, and it's all in QuickBooks. Does that save me from going through that process?
I would think so. There are times, like going back to the 8A, and I don't have the exact titles of these things in my head, but with the 8A, they have to have like a certain the accounting software has to meet a certain.
Yeah. I have clients that deal with that. Yeah.
So QuickBooks doesn't meet that thing. Ours does. So not everyone meets that standard. QuickBooks doesn't for whatever reason.
Yeah.
So yeah, I would think, but if you have it in that space, then you're kind of passing that off to that vendor, but then the vendor needs to meet that standard. And like I said, not all vendors meet that standard.
Yeah. Okay, thank you.
Well, yeah, I actually have everything I have, with the exception of my tax software, is online, just because I always think about what happens if my computer goes, then, you know, it's a nightmare. So yeah, and kind of like, again, things that we do here, mostly it's around accounting, payroll, taxes, and then financial work, you know, from an IRA up to 401ks for companies. We kind of brought those, we didn't do it, but the company we work with, our broker dealer Avantax, brought those 2 houses together back in the 80s, starting in Texas. And so they're on the stock market exchange now. So it's pretty powerful when you kind of combine that stuff together.
All right. Well, thank you, Hans. Any other questions? It's been pretty rich. Appreciate your time. And you see Hans's information if you want to follow up with him. He's available, and I put in the chat where where this video is going to be. I'm not sure if everyone was here when I did that, so I will go ahead and repost it.
Yeah, sure. I really appreciate that you post that. Do you guys do webinars on the marketing stuff, or do you just have the videos?
So, so one and the same. So every once a month on the 3rd Thursday of the month from 5:15 to 6:45 Eastern, we have an educational program of some sort, right? So today's happened to be on Accounting 101. Frankly, we do a lot on marketing because that's actually where a lot of folks have the need. And so back in the chat, actually, you know what I'm going to do? Hans, I'm going to stop your screen if that's okay, and bring you all to our BoomerWorks site so you can see more than just putting in the chat.
Yeah, I hit the link.
Yeah. So I'll show you all what I'm talking about.
Is that all past?
Yes. So right.
Okay.
So I'll sort of walk you through our site super fast. So the 2 places you're going to want to avail yourself of, first of all, our meetups. Okay. So we have the upcoming events page. So here you see today's, and then we have a list of the upcoming ones all the way through March of next year. And I keep finding speakers, right? And we keep adding. And then the other thing you'll want to look at is up here where it says training center. Okay. And we have all of these videos, just like today's, that are recorded. 99% of our speakers allow us to record. And so, for example, under marketing your business, you're going to see a ton, everything from, branding. And we have this very popular thing called Digital Marketing Mastermind, where I basically interview a marketing professional. We do Q&A, just all kinds of interesting topics. In fact, very, very recently, our last 2 meetings have been on social media. We've had a lot of receptivity to that. So in fact, we're thinking of doing a social media boot camp actually next summer.
Oh,
So
like it.
yeah. And actually, typically all of our stuff is free volunteer. I will just give a heads up. We're going to pilot something because the social media workshops that we're doing are only an hour and a half. And we realize that people want more. So I've been talking to these couple of social media professionals to see if we can offer very low cost deep dive, right? Like half day kind of thing for folks to actually get some more hands-on, help. So we're looking to do that next summer.
That's great.
All right, everyone. Well, thanks very much for your time tonight. Thanks again, Hans. Bravo. Have a blessed night, everyone. Appreciate you, and look forward to seeing you at a future BoomerWorks event. Okay.
Thank you.
This was very helpful. Thank you.
Yeah, you're very welcome. Oh, before we go, so sorry, one more thing. For those of you who do not know, on our website, if you want to join our mailing list to get just our once a month promotionals, that's all, we won't spam you. Go to the boomerworks.org, go to join our community, fill out a little form, and you'll be on our mailing list so you can stay abreast of what we're doing of all of our meetups. Okay. All right, guys, have a blessed night. See you again.
Thank you.
Bye-bye.
Bye.